And here we are, everybody. Sorry for starting a little late here. Had some technical difficulties, but I think I worked through that. Anyway, I am excited to share with you some strategies on how to help high earning tech sellers shift their income into tax advantaged investment income. And so if, I kind of mentioned last time, the tool I'm using here to multi-stream this whole presentation should in theory allow people to leave comments or ask questions. And I've kind of got all those things in there. So if I don't get to you, don't take it personally. Sometimes the LinkedIn one-way street doesn't work. So just send me a DM and I'm happy to address that with you. So let me get my screen sharing going here and we'll get that going. Where's my share button? We're going to share screen. We'll do a tab. Yeah, we'll do tab. That should be it. Boom. Okay, cool. I think that's it. I'll move that over here. Yeah. All right, cool. I should be able to see everything. Great. So let's get into it. Let me start with this one. All right. Hopefully you should be seeing. Okay, cool. Add a stage. Now you can see what I'm talking about. So we're going to talk about how to legally shift your W-2 income into tax advantage investment income, as I mentioned, and we'll jump right into it because there's a lot to cover. And there we go. So when you're, here's the problem, right? When you're a W-2 earner, you don't really have control when or how you're taxed. And the IRS likes to take their cut before you even see your money. And the more you make, the higher percentage they actually take. Now, if you ever looked at a large commission check and thought, gee, why does it feel like half of this is gone? Now, half might be an exaggeration, depending on the size of the check, but it sometimes feels as if half of it goes out the window, right? Well, that's basically because of how W-2 taxation works. And it won't change as long as you're earning W-2 income. So, why does this happen? I'm going to break that down for you. If I can, there we go. Okay, cool. So basically the takeaway here is that W-2 tax rates, they increase as you earn more, and there's very little flexibility to be able to reduce that. So if you don't really believe me, I will explain that by going to, do I have that sheet ready? Yeah, I don't. Skip that for a second. So a little bit about me before I kind of go too far into this. My name is JP Albano. I've acquired 700 apartment units in my real estate investing career. I built an in-house property management. I've raised more than $18 million of capital. I've built a portfolio at one point valued over $65 million. I've been working in tech sales for 15 years and sold over 250 million. I guess I could say $250 million now, $250 million in enterprise sales. Wrote an Amazon best-selling book titled So Rich You Can Quit. And I've helped 24 other tech sellers invest in their first passive real estate deal in under 90 days. I'll go into that more in my investment club. So my quick background, I've been there too. If you're on this presentation, this workshop, trying to learn about how to keep more of your commission check and pay less in taxes, I've been there too. This is a screenshot of a check that I earned. It was one of my biggest checks at the time. It was many years ago when I was trying to put money for a down payment for a house. And I was just gutted when I learned how much of it had gone into taxes. And it made me want to figure out a better way. And I feel like I did. And I wrote about it in my book, So Rich You Can Quit. And now I'm on a mission to help 1,000 other tech sellers learn these secrets, share it with them, and help them create a get out of sales escape plan. So basically what I do now is I help tech sellers build a financial fortress to help them save on taxes, create passive income, and invest in real estate to help them become financially free and escape sales on their terms. So when you're a W-2 earner, you don't really control, when or how you're taxed, right? The IRS takes their cut before you even see your money. And the more you make, the higher percentage they take. So if you ever looked at your large commission check and thought, why does it feel like half it's gone? It's because of how the taxation works, as I mentioned before, right? So basically, for W-2 earners, they really get the worst tax treatment. And that's because the way they earn their income, they're taxed at ordinary income rates. And depending on what class or what bracket they are in their income level is, it could be up to 37% on the federal side. And you really don't really feel the pain on that until you get into the higher echelons of annual income. And what I mean by that is, if you're earning $200,000 a year, you're not at 37% taxation rate. You're probably in the, high 20s. It isn't until you get over $500,000 that you start dipping into 35 and 37%. And every dollar above that amount, you're taxed at that highest rate. And that's really where it starts ballooning into incredible amounts, where if you make $1 million a year, you're spending, 400 grand, 300 grand in taxes. It's crazy. Now, business owners and investors, they control their tax liability by choosing how they earn and invest money. And the IRS doesn't reward employees. That's not how the tax code is written. Instead, it rewards business owners and investors who create jobs and growth. And that's sort of the secret, right? Like that's the mystery. And that's what I'm going to show with you, because that's exactly what the ultra wealthy do and those that earn lots and lots of money. So basically, the tax system wasn't built to favor employees, right? It was designed to benefit business owners and investors. So the solution is really, now this isn't a get rich quick scheme. This isn't like, I push a button, you do a couple of things, and then magically you're financially free. That is not anything I advocate. It's not realistic. This is a long-term growth strategy. And so the idea is to transition from W-2 earnings to tax advantage income. What do I mean by that? So this means using a portion of your commission to invest in assets that generate capital gains and passive income. This way, over time, you rely less on W-2 earnings and more on income that's taxed at a lower rate. And let's get into actually how you kind of make that shift happen. The first step, of course, is using your commissions to start building tax advantage passive income streams. So the goal, again, isn't to lower your W-2 taxes. Like, that is what it is. It's to replace your W-2 income over time with passive income, which is taxed at a lower rate. That's fundamentally the gist of what this is about. So most tech sellers make a lot of money, but they don't build an exit plan. They kind of assume they'll always be selling. But the reality is this career has a shelf life. And if you've been in this long enough, you kind of realize that. If you're on the early side, you're like, oh, this is great. I have unlimited energy. The smart move, of course, take a portion of the money that you're making now and redirect it into investments that will generate income and wealth over time. So that way, your future income comes from investments instead of commissions. Now let's talk about the type of investments that actually make that shift possible. Real estate is one of the best ways to move from W-2 income to tax advantage income, and I'll explain why. So again, your W-2 job is a tool. Hold on. Getting parched. Use it to build passive income streams that will eventually replace it. That's the name of the game. Let me just make sure I'm not getting any chats that come in. All right, cool. So passive real estate investing is really not about reducing your W-2 tax bill. It's about reducing your W-2 income. So here's the big difference. Your commissions are taxed at high W-2 rates. Real estate income is taxed at capital gains or passive income rates, which is a lot lower. Usually the difference is a max of 20% for capital gains versus a max of 37% on the federal side, plus state and local and whatever else on the W-2 side. So by shifting your W-2 to real estate investing, you're not just building wealth, you're also paying a lot less in taxes on that wealth. Now let's talk about how to actually execute this transition. So this is exactly why high net worth individuals allocate so much into real estate. It's a better income structure than W-2 earnings. So the key here is consistent reinvestment. You start by allocating a portion of your W-2 earnings into income generating assets. And over time, as those investments grow, they replace the need to earn commissions. Now, this isn't an overnight process, like I mentioned, but sellers who start doing this now will be financially independent years before those who don't. So let's look at a real world example of some of the folks in my investor club that make this shift successfully. So I realize, many of you might be wondering, this sounds great, but how do other sellers tackle these sort of problems? So let's check out a few of our tech sales investor club members. These are folks that read my book and joined my club, and they're all invested in deals and are earning passive income and will be paying less on taxes on that passive income. So we've got my homeboy Mark here. He diversified his income and secured steady passive returns for his family's future. My homeboy Jason, he started building a passive income plan and stopped letting his work hijack his vacations. I don't know about you, but how many times have you been on a vacation where you're still working? It's sort of a requirement in sales, right? Or how about Brian? Brian's invested in multiple deals with us. And he's seeing real returns without the hassle of active management, unlike his experience with Yield Street. Now, not to throw them under the bus, but that's been his experience. So now we'll get into some of the best real estate tax strategies that allow you to write off significant amounts of income. Now, the reality is most tech sellers are so focused on earning money that they never think about what they're keeping. And you might do a few standard deductions to max out your 401k, but that's not how the wealthy reduce their tax bill. They're using strategies that allow them to write off a significant amounts of income, all legally. And if you're not using these, you're just working harder to pay more taxes. And so what kind of strategies am I talking about? I'll explain that. So again, if you're already earning at a high level, now is the time to learn how to keep more of that. So why do wealthy people invest in real estate? It's not just about passive income. It's really about the taxes. Now, the IRS gives massive incentives to real estate investors. Even if your investments are passive, you can legally offset a significant amount of taxable income. And no, you don't have to be a landlord or deal with tenants to get these benefits. And I'll break down how these strategies work for you. Missed this. So depreciation is one of the most powerful tax advantages in real estate. It allows investors to take a tax deduction every single year, even though the property itself is gaining value. And then there's this concept called bonus depreciation. Now, you can accelerate with bonus depreciation, you can accelerate those benefits upfront, creating a huge tax reduction in the first year. That means even if you invest passively, you're still getting a major tax advantage. And let's look at another powerful tax strategy called cost segregation. And I will point out that over the last few years, this bonus depreciation is something that has slowly been phasing out and getting smaller and smaller. It started with 100%, and it's 80%, and now it's somewhere in the 40% or so. I'm very curious how the Trump administration is going to re-examine phasing back in the bonus depreciation, because it's been a powerful boost for investors and a great way to lower taxable income. So the takeaway for this is that the paper loss that reduces, it's basically a paper loss that reduces taxes without affecting actual cash flow. That's important. So let's talk about strategy number 2, which is cost segregation. So this is how real estate investors supercharge their tax benefits. So instead of writing off a property, right, the depreciation of it over the course of 27 and a half years, the IRS allows you to do, a cost seg, as we call it in the biz, allows us to break down the different parts of the property and accelerate deductions. So that could be the windows, the doorknobs, light fixtures, the roof. All of these things have different depreciation schedules. And when you lump it in under 27 and a half years, you kind of lose some of the zest. But if you break it down and you look at all the various constituents of what makes up a building, then sometimes you get a lot more value and a lot more depreciation. So for investors in passive deals, you don't have to do this yourself. The deal sponsor usually does this, and you benefit from the tax savings. And so here's where it gets even better for investors. When you combine depreciation with another key strategy called a 1031 exchange, all right? For those of you that are hanging around watching the live stream, I appreciate you watching this. Thank you so much. I have a special gift for you if you stay to the very end, okay? Special gift. Now, let's get into cost segregation, right? So this is how real estate investors, wait, I kind of mentioned this already, forget that part. Here we go. All right, 1031 exchange. This is how real estate investors avoid paying taxes when they sell. Now, normally, if you sell an investment property, you make a profit. Hopefully, if you're selling it right, you owe capital gains taxes on that. But with a 1031 exchange, you can reinvest that profit into another deal and defer the taxes on that indefinitely. That's really how the wealthy investors build wealth over multiple deals without ever taking a tax hit. Now, I will say this, 1031 exchanges are complicated. And they're usually not available to investors who participate in what's called syndications. These are the types of deals that we do with our club members, but for the sake of completeness and just sharing with you what's out there in the marketplace and how other ultra high wealthy people take advantage of the tax code, I want to bring this up. So you might be thinking, maybe why haven't I heard of this before? And that's exactly why I wrote about it in my book. Because essentially this is how the wealthy investors grow their taxes, grow their wealth tax-free over time. So allow me for the shameless plug. I cover all of these strategies and more in my book, So Rich You Can Quit. Now, these tax advantages aren't just for the ultra wealthy. Like, you don't have to think like, oh man, I can't use this. This is just for them. Nonsense. I'm just using it as an illustration to show you that this is something that I never knew. I grew up, kind of poor middle class. Maybe you did too. But if you didn't, and you grew up with a family office, you would know about these things. But most of us, we don't. So basically, they're for anyone that's willing to learn to take action. That's what the book is about. And that's why I want to give you a free audiobook copy at the end of today's session for my viewers right now. But the only way to get the code is to stay to the very end. Now, let's be real. Knowing about the strategies isn't really enough. The real question is, how do you start using them, right? Now, these strategies aren't incredibly powerful. Well, I guess they are incredibly powerful, but you actually have to implement them. And the first step is to reallocate part of your W-2 income into investments that qualify for these benefits. That's how you start legally keeping more of your commissions instead of handing them over to the IRS. And I break this down in my Tech Sales Investor Club module that I'll be releasing in Q2. We help busy tech sellers with getting access to passive deals that they can invest in our Tech Sales Investor Club. And we can introduce a great tax professional to help you who understands real estate. They understand financial planning. And it's just another benefit of being a member in our Tech Sales Investor Club. Skip this part. All right, so now we'll get into really the biggest tax savings mistakes high income sellers make and how to fix them. And also how to keep more of your bonus and commissions instead of letting the IRS take it. I know a lot of you want to hear that. So the truth is, most high income sellers don't realize how much they're overpaying. They assume that taxes are just a game of life, right? This is how it works. Life, death taxes. But that's not actually true. The tax system, as I mentioned, is designed to reward those who actively structure their income and investments in a very tax efficient way. That's what separates sellers who keep more of what they earn from those who just grind harder for the IRS. And I was one of those for many years. So what are the biggest mistakes sellers make? Let's break that down. I like to say this, you don't have a tax problem, you have a strategy problem, right? So mistake number one, too many sellers think maxing out their 401k is the best way to save on taxes. But a 401k only defers taxes. You still pay the full tax on that money, or full tax rates rather, later on. The real tax efficiency comes from shifting part of your income into investments that generate lower taxed or tax-free income. And that's the next level of wealth building, which brings us to our second biggest mistake, failing to structure income the right way. So mistake number two is too many sellers really think that maxing out, I kind of mentioned that already. Let's get back to that, my mistake. So they think that maybe not structuring income properly, right? So like I mentioned, W-2 income are taxed the highest rate. Well, you need to really, I recommend that you shift your earnings into investments that create tax advantage income. And then the sellers that structure part of their income through capital gains and passive income instead is really the best way of doing that. In other words, saying this, you're going to keep working your W-2 job for many years to come. That's great. What I'm saying is take a portion of your commissions and start slowly investing in these tax advantage, low risk real estate deals. And over a period of time, you can start earning more and more and more tax advantaged income, passive income through these investments, which provide a number of benefits. Number one, it's passive income. You don't have to sell things to make that money. Two, the taxes you pay on that money are going to be lower than what you're making on your sales income. Number three, you've got more tax advantaged structural leverage or wiggle room than you would otherwise on your W-2 income, right? And then of course, finally, like being able to build this thing that creates passive income for you at some point is going to surpass, depending on how much you invest and how fast you invest, it's going to surpass what you're making in a sales job. And that is how you become financially free. I like this. As long as you're earning W-2 commissions, you're still at the IRS mercy, right? How are we doing on time? I got 8 minutes left. You're going to be, hopefully be able to get this wrap this. I have 4 more slides left. So again, the key here is to not find these loopholes or new deductions. It's about really intentionally shifting your income into tax efficient investments. And that means, again, taking a portion of every single big commission check that you get and using it to both fund investments that pay you in passive income and in capital gains, both of which get better tax treatment than W-2 earnings. And that's exactly what we help sellers do inside of our Tech Sales Investor Club. I like this one. You don't lower your tax bill by hoping. Like hope is a strategy, right? It happens by intentionally structuring your income and investments. I'll be honest with you. This is something that, I don't know, I've for many years had a natural aversion to doing. I think for any of us sellers, when we think about having to do our income taxes, I don't know about you, but like I get to this thing where like there's this natural resistance, like, oh, I don't even want to think about the amount of brain damage it's going to take me to organize all this stuff. And I get that. And what I aim to do inside my Tech Sales Investor Club is make it super easy and super turnkey and take all the thinking away from you. And so with that said, that's why I started the Tech Sales Investor Club, right? So, tech sellers can make great money, but without a plan to transition out of W-2 earnings, they end up overpaying the IRS and staying in the sales grind forever. Inside the club, we help sellers find the right investments, structure their tax strategy, and execute a plan that helps them escape sales on their own terms. Now, if you're new to this and you want a deeper breakdown of how to pull it all together, I'm hosting a masterclass where we talk about this step by step. Skip that part. And so at this point, you kind of have two choices here. If this is showing right, hold on one second. There we go. Cool. So you got two choices. You can either keep letting the IRS take a massive cut of your commissions, or you start structuring your income like the wealthy do. Now, this workshop has given you the big picture of how high income sellers can stop overpaying in taxes. But if you want to go deeper, if you want the step-by-step breakdown of how to execute these strategies, join me for my masterclass on February 27th. And we'll go through exactly how to transition your income, implement the best tax strategies, and start building passive income the right way. And what I put here is I've got a QR code. Take out your phone. And if for some reason you can't do that because you're watching this on your phone, that's fine too. DM me and I'll get you the link here to use that. But scan the QR code now to register, and you'll walk away with a clear game plan for keeping more of your commissions and building real long-term wealth. So congrats on making it to the end. For those of you that stayed with me the entire time, I want to reward you with the opportunity to take advantage of an offer to get our free Spotify audiobook of my Amazon bestselling book, So Rich You Can Quit. Simply DM me the phrase, this is the key here, So Rich You Can Quit February or Feb, either one, and I'll get you a site to go to, and you'll get you a registration code, and you get a free Spotify audible book of my book. It's me, yours truly, recording it, or I guess narrating it. It was a lot of fun doing that. How are we doing on time? We've got 5 minutes left. So with that, we've reached the end of the presentation. I applaud everyone that stuck along the entire time. Thank you so much. And I will see you next week for Tech Sales Thursdays. I'll do another workshop. And then if you like this and you want to go into more detail, I encourage you to consider joining my masterclass. I'll go into more details there. And that's it. Thank you so much for watching. I'll see you next time. By the way, I can't wait to help you become So Rich You Can Quit. I love doing that. It's just a great transition. All right. See you next time. Bye, everybody. Oh, wait, I have a comment here. Need a link. You got it, Kyle. I'll get you the link. No problem, brother.